Hey everybody, thanks for checking out yet another great interview in our Business Connection Virtual Summit. Today we're talking to Sheel Mottawla, and we're going to be talking, he's from Movement Mortgage, and we're going to be talking about mortgages from the standpoint of two different things. One, what it takes to get a mortgage, because the environment's always changing. And then also, if you're looking to be a mortgage broker, what are some things that you should be thinking about? So without further ado, Sheel, tell us who you are, what you do, and a brief little intro into the kind of things we're going to be talking about.
Thanks, Bill. I appreciate that. As Bill mentioned, I am a mortgage lender, so I'm a loan officer. I help people typically finance, buy their house, refinance their house, or buy their second house or investment properties, and go through the whole process to make sure that they can get financing and secure a loan. I've been doing it for a little while. I come from I used to have a title insurance company I used to run as well. So I've been doing real estate for quite a bit. I've done some flips, some investing, and some commercial financing as well. So I've kind of done a lot of different things, different aspects within the real estate industry, which kind of helps me kind of meet the borrowers where they're at and help them through the whole process. As Bill mentioned, we'll talk a little bit about the pre-approval process, the loan process, as well as if you're considering getting into this field, a little bit about that as well.
Awesome. All right. So, with all of that in mind, let us go on to the first question here. So, when it comes to getting a mortgage, like I said, the environment, especially when COVID hit and such, I know a lot of mortgage companies, we're looking to do a lot of different things to kind of become more appealing. I've talked to a couple brokers lately, and there's different things that I'm hearing from them. So I want to kind of see what is now, what are some things that people have to go through to get pre-approved for a mortgage?
The process breaks down to a lender is going to typically look at it's going to break down to credit, income, assets, and your liabilities. And taking a look at that snapshot will give the information that a lender needs to see whether, what loan, what program your potential information would fit into, and make sure they underwrite to those guidelines. A little bit as your credit is going to be your credit score. So your FICO score is going to be, it's going to show you the track record, your history of your credit, what you have open, what your liabilities are, what your score is. That'll help determine, what kind of risk factor, your particular situation is. Your income is going to be, a snapshot of your last 2 years, whether you've been an employee or self-employed. And we'll look at it. If it's an employee, it's pretty straightforward. It's just if your salary, it's whatever your gross monthly income is. So your annual salary divided by 12 will be gross monthly income. That's what you use for that base. And then it depends if you have commissions, bonuses, et cetera. Or if you're variable, hourly employee, we kind of research that. If you're self-employed, we're going to look at your tax returns because depending on what you, not necessarily your top line revenue number, we're going to look at what your profit dollars are and how that breaks down either to over a 12-month period, over a 24-month period, depending on what your particular situation is. Assets, we're going to look at what you have saved up for down payment and closing costs, what do you have in the bank, what you have potentially, from gift funds, those type of things that you can use towards your down payment and closing costs. And then your liabilities are going to be the information that's on your credit report. That information is going to be broken down on a monthly basis, what your car payment is, your liabilities, your monthly car payment, your student loan debt, your monthly minimums on your credit cards. All of those things are going to be factoring into your liabilities. And we'll put all that information in, see what your debt to income ratio is, which is going to be your liabilities divided by your gross monthly income, as well as factoring in what your potential payment is for a mortgage. And we'll take all that information, analyze what you're ultimately looking to buy, and then get a loan application, which will be a snapshot of your 2 year history of where you've been working and where you've been living. And then we'll be able to provide that information and run it through our underwriting and hopefully issue a pre-approval based off of that.
Cool, and that is a lot to definitely go through, and break down to. But I like how you broke it down and basically to sum it up a little bit to kind of just regurgitate it back, if you will. We look at the credit score as to see, where you're at as far as, you know, your history of paying things off. Look at your income, and you explained a couple different ways that we look at it. from the self-employed and the W-2 person, and then also assets. And some people do have them, some people don't. I personally don't have much in the way of assets because I'm currently renting. However, I will be buying my first house soon. Uh, so assets. Where are you at? And then also looking at that overall picture. So um, now that we kind of have an idea of what we're bringing to get pre-approved and what kind of things that we're looking to see on that, now we have our pre-approval and we are shopping for our house. What are things we need to keep in mind? Because I know there's a lot of things that can change the pre-approval. So like, what are things we shouldn't be doing? What are things that we should be doing? And what should we keep in mind while we're in the point where we're getting something under contract?
Yeah. So as you're shopping for a house, so if we, after we take that information, we analyze, we issue a pre-approval based off a hypothetical property. As you're shopping for houses, you're going to want to see, you want to maintain your credit profile. So that means like, don't miss your payments, make your monthly payment. Don't like all of a sudden max out a credit card where you didn't have it maxed out before. You want to continue to not buy a new car. Don't open any other new credit lines prior to closing, or at least if you are going to be in a situation where you have to replace your car or do that, just to give your loan officer, give myself, or if that's the case, enough notice that saying, all right, well, this debt's going to go away, but this debt's going to be replacing it. And ideally, you have it ahead of time prior to closing that you can get that all situated, so that's not going to be a hiccup. But you want to maintain your situation. Obviously, if you have a loss of employment, your income situation changes, you want to let us know, because obviously that's going to be, we're factoring the pre-approval over based off of that information being accurate. So if that changes, then it's going to obviously change the process. And then also you keep in touch with the loan officer, keep in touch with the individual, because as you're shopping for a house, you have a hypothetical pre-approval, but actual property that you're looking at, depending on when you're shopping for it, things could have changed. The market's moving pretty quickly right now, a lot of shifting going on. So you want to make sure you're comfortable with your estimated payment, your estimated cash to close, and for that house, because things could vary. So if the interest rate, the purchase price of the property, those and the taxes change, that could vary. Make sure everything's still comfortable.
Absolutely. And I think that kind of touches on one of the things about real estate in general, that things are always changing and moving. Mortgage industry, it could be interest rate, like you said, or the house price changing. If it's the house, the market in that area could change, or maybe we could run into a COVID or the shutdown or 2007. Like you don't know what's going to happen. So keeping all those things in mind is definitely a key point. So now that we have it under contract, and we are heading to the closing table, what are some of the things that we would be going through during that time period?
Yeah. So once you got the property under contract, you've made an offer, the seller's accepted it. You're gonna go through that. You'll reach out to your loan officer. You go through this. You'll make sure that you get your rate locked, because it's going to depend on the time frame of your closing. If you're a 30-day or 45 or 60-day closing, you want to lock your rate so you at least know what your payment's going to be. And then you're going to start the disclosure process. So what'll happen is you get disclosures, typically electronically, which you're going to review. It'll have a loan estimate along with a bunch of other disclosures that you have to e-sign or sign manually, depending on what the process you're going through. And then you're going to have some of the documentation. Some of the documentation that you initially provided might have to be updated. You want it to have it current. Your loan will get assigned to a processor. Typically, a processor will review your file and will help you get your loan clear for closing. They might ask for some additional information. Once they have all that, they'll submit it to an underwriter. An underwriter will review all of your terms of your loan and make sure that it fits the guideline, and ultimately issue a commitment letter. A commitment letter is a commitment to loan you the funds for your closing. The commitment will have a couple of conditions on it, depending on what has been cleared or hasn't been cleared. One of them will be like homeowners insurance. You have to maintain homeowners insurance and get a quote for that as part of your purchase. Once you supply those conditions back to the underwriter for the things that you have to take care of, your loan will get submitted to get clear to close. You get a clear to close issued. You get a final disclosure as well, which will give you actual numbers, typically 1 to 2 days prior to closing, so that you know exactly how much cash you have to bring to closing, as well as your estimated monthly payment. You'll get notified that along the way, but that'll be the final numbers, typically 1 to 2 days prior to closing.
Mm-hmm.
Yeah. And then you go to closing, get the keys, sign some paperwork, and you're all set.
Absolutely, and that's where we want to be. So, all right, cool. So, there's definitely a lot of steps, and obviously having someone there who can walk you through all that is very important. And I think that you know, one thing that I think everyone needs to keep in mind is when they're going to the closing table, they need to make sure that they practice, the good financials that we were talking about, not buying cars, not doing credit cards. And, if you're going to propose to your wife before you move in, don't have to buy the ring then, buy the ring beforehand, like big purchases and stuff, but also, making sure that you do have the cash to close and keep track of those numbers. And pricing out the home insurance isn't something that can necessarily sneak up on you, but, making sure you're aware of like what that's going to cost. And I know home inspection. So here's a question. So let's say home inspections or things like there's delays or anything from the closing, which happens quite frequently. Um, do those delays, besides just pushing things back, affect the mortgage process?
It could. I mean, so typically, if the home inspection, like all those negotiations, like you got a couple of different points of negotiation through the process. The sales price,
Mm-hmm.
the concessions, and then home inspection situation. So, um, I've been fortunate a lot of times. I work with a lot of great agents, and we set the situation. So typically, the closing date doesn't get delayed. But if it does get delayed, then you have a couple of options for the lending process. We're still going to be working on getting the file clear to close based off of the commitment date and the closing date. And really, myself and my company, we work typically like very quickly, regardless of even if it's 4 or 5 months out or 3 months out or 1 month out, we're going to be working to get this clear and close as quickly as possible. So until we have that, if there isn't a reason, if we lock the rate, typically the lock of the rate is like a 30-day, there's a 37, 45, 60, et cetera, up to 90 days. You have different lock periods. So if for any reason you're beyond that lock, you'd have to just pay for a small extension if you have to go beyond that. But typically, there's usually a few days of cushion in there just to make sure you're covered. Just if there was a delay for something that happened with the seller or the inspection negotiations, as you mentioned, to make sure we're good.
Of course. All right, cool. So I think what I want to do now is shift to the other side of it, talking to the people who are considering becoming mortgage brokers. And I think the first thing is, what does it take to be a mortgage broker? What licenses do you need? What kind of things do you need to put together? But also, where do you need to be at when it comes to your mindset and such as well?
So like it's there's a couple different. So you it's kind of a broad question. So
Mhm.
I'll give you my own opinion, which is just my opinion. Obviously, I don't want to dissuade or give false promise to people. They go through it themselves because obviously my experience is only my experience, and it's just a fraction of the overall industry. So, but there's a couple different ways that you can get involved if you're thinking of it. I would say, well, first we'll talk about mindset and that, and then I'll to give you a little bit of background as far as a couple different options and how that would kind of play out. So, depending on how you feel you're going to be getting business, whether you feel like you're going to be able to self-source or you're going to be able to, want to have a lead funnel or generated leads towards you, is going to really help determine the path. I mean, obviously the leads self-source is really going to be the key. That's where the partnerships come in, the ability to establish relationships, and that's going to be the stuff that's going to be kind of consistent even through down cycles, because if you're depending on these leads and you're depending on refinances coming in, it's cyclical. So as you can see right now, we're currently talking in this current year, you're down 83% from year over year from refinances, where the rates have climbed, and you don't have that. So if you're depending on that, you might be in a situation where every time the cycle changes, unless you adapt, you could be out of a job or having to pivot. The mindset, if you're if you're self-sourced, then if you continue to establish relationships, you continue to grow that and provide value through that your efforts, you hopefully can continue to grow that and kind of build it. But being self-sourced is you have to have that mindset of of a lot of action, being in a good space mentally, and kind of coming from and taking action from that good place in order to get the results and the thing that you want. And if you don't do that consistently, you're not going to get the results consistently. So it's very much you get exposed very quickly if you're not not aware, not working on yourself, not trying to improve. So it can be a difficult space, but for me, it's been a really rewarding space, and it's also like I wouldn't choose any other situation because I always want to try to continue to learn, grow, and improve myself so I can be a better value to myself, to my loved ones, to my community, to everybody around. So I know that's a little bit, and then I'll get into the other part, Bill, where you're talking about as far as potentially where mortgage broker. I know you mentioned a couple times. So I'm a loan officer, so there's different versions. So if you work for a bank, for instance, they are awesome. They're licensed themselves, so you individually don't have to be licensed if you're working for a bank that's federally chartered, because you can use their licenses to lend. If you're a mortgage broker or a working for a mortgage banker, then you do have to get your NMLS license, and then you have to, have a corporate sponsor to sponsor you. And then depending on how you want to get started, I mean, there's people that you can, hopefully connect with that might be able to, mentor you a bit. Or if you feel you already have a book of business and you're self-sourced, you just want to jump in, you'd have to have somebody that's going to help kind of bring you up to speed, because there's quite a few moving parts that you need to kind of be aware of. And there's different ways of getting into it and seeing if it's a right fit for you. But that's a little background, though.
Yeah. All right. So we talked about the differences between loan officer and mortgage broker. So the banks, those would be loan officers too, or are you talking differently?
Yeah, I mean, they'd still be loan officers. The mortgage broker is going to be somebody that's going to be brokering the loan. So they're not
Mhm.
necessarily, so they could be funding the loan, they could be selling the loan quickly. It's a little bit different. So the broker license is a little bit different, and they're going to be pulling from several different investors to kind of meet the guidelines for the particular borrower.
Mhm. So then you as a loan officer are different than a bank?
I'm a mortgage banker, so we are funding and servicing all of our loans. I mean, we can sell the servicing too, but we're funding our loans and underwriting them to the government, Fannie, Freddie, and as well as the government agencies.
Okay. All
Yeah.
right. Now I understand. So all right, cool. So now we talked about the mindset, where you need to be, being able to be independent, even if you are sourcing, leads from the company. And then also some of the things that it takes to get into the field as far as licenses and those kind of things. Um, you know, what does it take to be successful in the mortgage industry? And I know that's a broad one, so I wanted to kind of touch on a couple different topics that you've seen of people that have become successful, I guess would be kind of a way to phrase that question.
Yeah, I mean, I guess yeah. I believe there's many ways up the mountain. So
Mhm.
depending on what success means to you, depending on that, but generally I'll take success as being very like being able to generate a lot of business while also having a nice balance. I think it's important to be able to structure, because you're not, if you are a self-sourced individual and you're not necessarily going into a call center where you're getting calls all the time, calls coming in 9 to 5. If you're all self-sourced, you have to be disciplined to make sure that you create a structure where you can still be successful. So making sure you're doing the high value high value activities first and foremost, and that can be difficult, especially if you're not in a great mindset. You have to be consistently making those prospecting calls, making those outbound connections, and learning and growing yourself, so you can continue to provide value to those relationships. And then you have to take care of the other items, the pipeline management, making sure your back end, front end is all taken care of, making sure everybody's happy, and the process is flowing smoothly. But doing that in a way that you schedule, whether it be time blocking, effectively making sure that you're building out your plan of action, your weekly flight plan correctly, so that you're hitting your monthly, your quarterly, and yearly goals. Some of the things I've seen and some of the stuff I try to, take into account to my own process. And there's always room for improvement. And a lot of times when you realize something's not working, it's like, okay, well, this is a time to try to adjust it and fix it and try to get better at it. So.
Absolutely. And that's been a reoccurring theme, having that adaptability, when you're a business owner or self-employed, like we're talking about. And, having the ability to do things and then adapt them as you go forward, whether it's from your lead generating or your processes or the way that you're handling your clients, so that you can get referrals and testimonials later. Um, so one thing that I want to kind of touch on a little bit too is, I mean, we mentioned it a little bit, but what are some good practices when it comes to lead generating in the mortgage field? Because I do feel like it's different depending on the businesses you're in. So understanding a taste of what it's like to be communicating this to people, to be explaining it to people, to be generating those leads, for lack of more specificness. So that is the question. What are some good practices when lead generating in the mortgage industry?
I mean, it's a consistency, and coming from a good place. Making sure that you treat those phone calls as opportunities, and make sure you put that energy behind it. I mean, as I mentioned before, you do get exposed. I mean, it's not for everybody, and there's a lot of people that that try it and they don't feel fit and they move on. And there's people that try it and it fits and they're very successful with it. But I think it's somebody that's going to be in a growth mindset, ultimately going to be able to try to deal with a lot of the stuff that they need to deal with in order to kind of improve. And you got to be consistent and really and disciplined, because otherwise there's not really a structure. So a lot of times if you don't have that structure, you're used to it or you need it, and you don't have it and you're not able to set it up in a way that you can be effective, then it could be challenging.
No, I agree with that, and I think that structure is what a lot of business owners or self-employed people miss, and the power of that. So having the ability to, you might not go to an office, you might not have somebody who's above you, but knowing that you still need to work from 9 to 5 or whatever your hours are, and having those consistent time blocks that you were talking about, and the consistency in what you're doing as far as lead generating and such, understanding the whole pipeline. It's a different concept than being an employee, and I feel like it's something that across the board, and we've talked about this in a couple of the interviews. It's obviously a reoccurring theme, being able to create that schedule, the importance of treating, even though you have the ability to make your own schedule and be free, you still need to treat it as if it is a job that requires an X amount of time to complete. And I think that's a very important mindset to have. So with that in mind, before we get into some actionable steps for people looking to get a mortgage or people looking to get in the mortgage industry, is there anything else that you think we haven't touched on?
No, I think we covered a good amount, and I think that's pretty much it. I'm not used to talking. I'm used to more asking questions and listening. That's more my style. So, but yeah, no, I don't think we have anything else that I wanted to share.
Cool. So then let's get into some actionable steps. So first, let's do the one with people looking to get a mortgage. What are two actionable steps that they can do to start putting them in the right direction?
First is if depending on where your situation is, if you've gone through financing already, so you've already gone through the process. But I guess speaking to the people that haven't gone through the process, that are wary about it, just don't know where they stand. I think it's like, talk to a mortgage professional, like have a conversation, and you got to make sure you resonate with them and they connect with you. But you can get an education. You're going to at least learn where you stand now, because some people are scared of scared of what they don't know, so they make these assumptions of based off of of whatever they have, but really you don't have the information at hand, and you really just need it to be looked at so that you can see where it is. And then, if you feel like you're not getting the right information, you can always, talk to somebody else. But ultimately, you're going to get information that's going to help you and see where you are, because you might be in a situation where things make sense. Maybe there's a program that's available that can help you with down payment assistance. Maybe there's a situation where you think that, oh, I couldn't do this, or maybe you can get a gift from somewhere else. There's all different ways of possibility of making it happen. But if you don't have that conversation, you're never going to know where you stand. And you're going to say, oh, well, I'll just wait till next year when I get this amount, or I get this 20% down. When you don't need that. You can buy homes with much less percentage down, sometimes even 0% down. You might have to cover closing costs, but it just depends on what your situation is. So I think it's my first actionable step is, if you're thinking about getting financing, talk to somebody, whether it be me or somebody else, like have those conversations so that you can at least educate yourself and get a plan of action going forward if right now is not the right time. Second thing is, like, maybe even if you're thinking about investing in, starting an investment portfolio or buying houses, those are the things that you still need to have a conversation to see where you stand. Because a lot of times, if you already have a house and you have an investment portfolio, it's not going to increase your debt to income if you're buying a property that you're going to be renting out, because as long as the rent covers that, you're not really like extending more. As long as you have the cash to closing that you need to invest into it, into the next property, like you can start building your assets pretty quickly. But again, you need that conversation. You need that person that's going to be there for you to help you through this. So I think and then once you get that, you can start, connect with an agent. He can help you with that as well, and start looking at properties. And then find something. You'll see what it is. You'll start discovering what you like and don't like as you start the search. But making sure you feel good financially is an important first step.
Absolutely. And then now let's take it from the other side, where someone looking to get into the keep saying broker, but being
Mortgage lending.
mortgage lending, getting into the mortgage lending industry. What are some good first steps for them?
So I guess that's going to depend on what you want to do. If you're looking for self-sourced, I mean that in our current environment might be difficult, just because a lot of people are cutting back at this moment. But if you're self-sourced, you're gonna either, if you're gonna jump in, you're gonna have to find somebody that is gonna be able to spend the time and effort to kind of train you, to bring you on the board, or you can look into getting a loan officer assistant, junior LO, loan processing, those type of things. But again, those are not going to always be in the same wheelhouse, depending on if loan officer is ultimately a goal or beyond that. It's you can see, I think there's going to be, as things kind of shift, you're going to have people getting more into it and looking for hiring. So keep an eye, check out your network, and see if you have people that have been doing it. Maybe you can connect with them, talk a little bit, maybe even just shadow them a little bit and see what they do, and see if it kind of resonates with you, and then kind of see how I can help, see how you can assist them.
Absolutely. All right, cool. So with that, I think we covered a lot. So, thank you so much for breaking this down for us. It's definitely an area that I think a lot of people are either going to buy a house or look to get into. So it's one that people touch on a lot. It's one of the few industries where almost everybody kind of ends up there one way or the other.
Yeah.
Because they all buy a house or finance something, maybe investments. There's just so much that people do in this industry. So, with that, thank you everybody for watching the interview, and we will see you at the networking event tonight at 5:30 p.m. Eastern time.